Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Asana is going to report earnings on June 1st, and this is one of the really interesting companies to watch. I'm a shareholder because I really like the product, but there's a ton of questions about the company's operations, the amount of money that they're spending on sales and marketing, the amount they're spending on stock-based compensation. So I want to go through what I'm looking for in this earnings report and how I think we should process it as investors, because this is absolutely a high growth company, a high potential company. We got a lot of questions ahead. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And I want to start with the last quarter earnings release. This is fourth quarter fiscal 2023 results. Asana's year ends at the end of January, so it's a little bit of a funky year. But you can see that revenue was up 45% for the year. That's really strong. Annualized revenue from customers spending over $100,000, up 80%. The company's done a great job growing that revenue, but that's come at a cost. Net loss was $95 million. And this is quarterly numbers now. So $150 million in revenue results in a $95 million loss. Cash flow from operations, negative $31 million. So the delta there, the difference between the $95 million loss and the $31 million in negative cash flow, is because the company's spending a lot of money on stock-based compensation. Most of that difference is made up by stock-based compensation, which is not a cash expense, but it does go down to the net income line. For this current quarter that's going to be reported on June 1st, revenue is expected to be up 24 to 25%. That's a deceleration, so keep that in mind. Loss is also expected to be $38 to $40 million. That's a slight increase in the loss that was reported in the fiscal fourth quarter. And then for the full year, revenue is expected to be up about 17 to 18%, and still expecting some pretty hefty losses. So that kind of puts a benchmark around what management is expecting from a revenue standpoint and from a loss standpoint. But more specifically, what I'm looking for is how much can they cut some of those operating expenses, specifically on sales and marketing? Because right now it seems like Asana is in a position where it's very, very expensive to acquire new customers. And that's not a great position for any SaaS company right now, or software as a service company, because there's less and less growth out there to be had. I would like to see this be a company that's a little bit more self-serve, that has much lower sales and marketing costs. We've started to see them move in that direction, but we need to see more progress. Also, what sort of pricing power do they have? Are they able to increase prices and as a result, increase margins? That would be a positive trend. I'm not expecting any sort of positive free cash flow or a net profit from an income statement standpoint. But Asana does need to show that it's making the right steps to become a sustainable company. Because as this stock has dropped, the number of options that Asana has to keep the company afloat have really diminished. We know that Dustin Moskovitz, who is the CEO and the founder of the company, is very wealthy from his founding stake in Facebook. But that is only going to get you so far as a public company, especially if he has to keep coming in and writing big checks to bail out the company, which he did last year. So I'd like to see progress on maybe a little bit more revenue growth than they're expecting, and then operating costs, specifically the sales and marketing line. I would like to see that come down really significantly. Better yet, if stock-based compensation comes down dramatically, something I think we're going to see across Silicon Valley, that would be a huge step in the right direction. So that's what I'm looking for with Asana's results. What do you want to see? Leave those comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.